Welcome everyone. Good evening or good afternoon or good morning, depending on where you're joining from. My name is Satya Kejriwal and I'll be the host today and the session will be conducted by Saurabh Bharti, very famous blogger. Uh, so the session today will be on the landed cost accounting and inventory valuation in Microsoft Dynamics 365. And this is the session number 29. If you are following this community, so we are running this community since last almost more than 2 years. Uh, so Rachit Garg is our founder member and supported by Umesh and me, Satya Kejriwal. You can follow us on LinkedIn. If you have not been part of this group, you can follow us on the YouTube as well. And Twitter. All the videos will be on YouTube. If you want to see our previous videos, there are more than 20 videos now there. On LinkedIn and YouTube, overall, we have more than 22 members globally. And we keep on talking about not only about Dynamics. And as you know, Dynamics is not about FNO anymore. It's about Power Platform, about CE, and a lot of things like. And this is the definition of new solution architect as well. You should not you can't afford to know just about FNO, right? You need to know about Power Platform a little bit and Power Automate and CE as well. Okay. Just for your information, I'll not go into detail of all these sessions, but these are the sessions we had in the past. Again, these are ranging from FNO functional, technical, integrations, Power Automate, dual right, and sorry for the disturbance. So the other session, as I said before, these are all are on YouTube now. If you wanna go and check there. Sorry for that. Right. So let's talk about today's session now. I'll hand over to Saurabh Bharti, who will be talking about landed cost and inventory valuation with landed cost. Over to you, Saurabh.
Thanks, Satya. I think, can you make me the presenter? Uh,
Right.
Just a minute. Just checking it. Can you check now?
yes, it is that. So I'm using a single screen today. Sorry about that because I'm at home. Okay, so you need to just bear with me. Like if I'm switching over, stopping sharing, and then switching then, and just let me know if I lose you in between somewhere if you can't hear me or something. Rachit, Satya, please just
Sure. We'll remind
interrupt
you
in
of
between.
any question as well. If there are any question in
Yes,
the chat box, always.
yes, yes. Okay, so hi everyone. Hope you all are doing good and welcome to this session. Okay, so today we are going to talk about the landed cost module, and in the landed cost module, we are going to talk about more specifically the financial impact and the inventory valuation impact of this landed cost. Okay, so during this session, we are going to cover about what is landed cost, the overview about the landed cost. We'll talk about the landed cost versus the transportation management. What's the difference when we should use the which one, right? We'll try to drive this session with a problem statement so that you can just understand that how in the real scenario in your implementation project or in your work time, right, how you can utilize this, right? And based on that problem statement, we will see that there are different use cases, right? And we will try to have the system demo of those use cases, and then also we will see that what are the key configurations which are required to perform those or to achieve those use cases, right? Bit about me. My name is Saurabh Bharti, Microsoft certified professional. I've been working on Microsoft Dynamics for last 10 years. These are my contact details. I write blogs. I started recently the YouTube channel, sharing my experience and knowledge on that. There is the LinkedIn profile. So if you want to connect with me, feel free to connect with me. Send your queries, anything you want. Like if I can help you out, definitely I will do for you. Okay. A quick disclosure, right? So this session, landed cost has got uh, like you have the supply chain like procurement, sales and marketing. There are modules, right? And similarly, there is a landed cost module which has the lot of activities which are required to be performed as a from the supply chain perspective or warehousing perspective, right? But in this session, we are going to focus on the financial impact of that and the inventory costing impact of those activities. Because I'm not that good in the supply chain, the advanced warehousing, and things like that. So we'll skip those parts or those activities. We'll just focus on that, how it is impacting the financials and also the costing part. Okay. So that's just a disclosure for this session. If you have anything related to the warehousing and things, maybe you can send me later on. I can try to figure it out for you that how those things can be performed if you have any specific questions. Okay, so the first question, what is landed cost, right, in Microsoft Dynamics 365 or in general as well, right? So landed cost in a very simple term, if I say that if your good is transferring or moving from one location to the destination location, right, through different legs, right, so different places, right? So the cost associated, the cost associated with that product, right, along with the additional cost during that journey, right, is the landed cost for you. So for example, if you purchased any product from your supplier, right, and it is, let's say, overseas supplier you have, and that product has a base cost, a purchase cost. Now that product is, let's say, transferring or traveling across different locations. Let's say first it has dispatched from the supplier warehouse, then it has reached to a port or let's say some other cargo place location or some port, right? And from there it has traveled to your destination, your warehouse. And during this journey, you might have different cost or different parties who would have involved in transferring this good from to the destination warehouse, right? So you might incur the insurance, custom, port charges, the freight, right, local transport, right? There can be different types of cost which are associated during this journey, right? So the base cost plus these additional cost is your landed cost in your destination warehouse. So that is the landed cost for us. Okay. Now in in D365, if I talk about the landed cost, right? So it is kind of a part of your transportation module. So we already had a transportation module in D365, and now we have the landed cost, right? So the question comes that what is the purpose of the landed cost if we already had the transportation management, right? So basically, on a very high level, if I explain you for your outbound transactions, right, you can use the transportation management. That is more fit in my opinion, right? For the inbound transactions, right, basically your purchase order or the transfer orders which are inbound transfer orders, right, you can use the landed cost. For the sales order or the outbound transfer orders, you can use the transportation management. There are certain functionalities which are available in transportation management as well, from the inbound operations perspective, but those are the limited features. And one of the uh, functionality which is not available at all is the goods in transit management for the inbound operations or the inbound transactions, right? So that's available in the landed cost, right? So that's what is the landed cost in T65 and in which case you should use it. So it should use for your inbound transactions, right? Now, if you compare, if some of you are aware about that, the landed cost versus the transportation management, like we have different terms in the transportation. So you would have heard the term as load, right? And in the landed cost, it is called as voice, right? So load is like when you are shipping something, the container, like when it is going, right, in a journey, right? And similarly, the voice is also a kind of a vessel through which the goods is transiting, right, from one location to another location. Similar, the route is there, and in landed cost, it will be accountable to that is the journey. The route segment is, let's say, if you are traveling from your source location to the destination, but you might have a different routes breakdown in between through which the goods are traveling. And in the landed cost, it will be legs you will be calling. Then similarly, you have containers, and here it is called as shipping containers. So uh, uh, anyone who has worked on the transportation or advanced warehousing might be familiar with the left hand side terms which we have, and the right hand side terms are also similar to them, but it's part of the landed cost now. Okay. Key terms which in the landed cost, like which is similar to the previous one. So you might hear about that there are certain voices are there, so which I will use in my example also. So voices are typically one vessel, right? So which we will be using, right? Folio is the shipping container. There are cost types we are going to use, such as the freight, customs, insurance, local transports. The auto cost, we will talk about that, how the auto cost can be used, right? Goods in transit also I'm going to talk about today in one of the example, right? So these are the key terms you need to make yourself familiar with, and when while working with the landed cost. Okay. Okay, so now we understand what is landed cost, in which scenario we should use, right? So I'm going to talk about two different problem statements in this session, and I'll try to cover as much as possible. Okay, so first problem statement is like when the goods are trans transmitting from the source location to the destination location, right? So you have the base cost, but you have the additional cost there, right? So let's say freight bills are there, or the local transport is there, or the insurance is there, right? Now, all those are your estimated cost, right? When you create the transaction, right? Now, what is the impact of this, the additional cost, let's say freight bills, right? When we receive them actually, and it is different from the estimated cost, right? How it is going to impact my final product landed cost, right? What if I have sold, let's say I have received the goods in my warehouse and I have derived my landed cost based on the estimations, right? And I have sold that. But when I receive my freight bill, right, that's different. So that will change my product's landed cost, right? And since I have already sold that, so how my cost of goods sold is going to be impacted, right? So how the adjustments are going to be posted, and what is the accounting we are going to have for that, right? So this is the problem statement we will talk about. And this we can understand with this one example. So let's say we have one product, right? I have just created one product, let's say import 001, right? And we are purchasing that product from a supplier, right? And the base price of that product is, let's say, $1,000. Okay. Now, when this product is transported, right, by a shipping carrier, right? Let's say a partial carrier, which we have as a vendor in my system, right? It is going to have the multiple cost associated with that. And let's say we want to have the freight, insurance, fuel, and the local transportation cost. These are the estimated cost for us. Okay, so I'm going to have the base cost $1,000 plus these four additional costs with that. Okay, now how these costs should be calculated. So let's say my freight cost is $100, right? And I want to set up my insurance is the 10% of the item price, so which is 1,000, 10%, which is $100 for me. Let's say fuel cost, I'm saying that it is $1 per measurement. So let's say the weight of my partial or the product is 20 kg. So 20 kg measurement is the kg, right? So that is going to be my fuel cost. So 20 kg, if I'm saying so $1 per measurement, that means $20. Okay. And then I'm going to have the local transport also, which is the 10% of my freight cost, not on the not based on the product cost, 10% of the freight cost. So whatever is my freight cost, the 10% of that will be the local transport. So in this example, let's say if I say $100 is my the freight cost, so 10% of that is going to be the $10. So now if based on this example, if I calculate my total estimated cost, right, it will be 100, which is freight, then your insurance plus your fuel plus your I think the last one was the local transport, right? So it is going to be $230, right? And if I talk about the landed cost in this example for me in my warehouse, right, it will be the 1,000, which is my base cost, plus 230, which is my estimated cost, additional cost. So 1,230 is going to be my landed cost. But what if the cost which I have estimated as a 230, right, for me, and when I receive the freight bills from my supplier, right, it is $300. So that means it had changed, right? So my final landed cost should be $1,300, not $1,230, right? Now, based on this example, I might have multiple scenarios in my system, right? There can be multiple use cases. So let's understand based on this example, the problem scenario, right? What are the use cases which are possible? I have listed down a couple of use cases. So the first use case is my actual freight bill is received after my item is received and the invoice. So that means once I will receive my product and if I will invoice, my cost will go based on the estimated cost 1230 because I have not received my freight bill. Now, since I will receive my freight bill after that, and that is going to be 300, so $70 is going to be the difference. So how system is going to make this $70 of the adjustment in my actual landed cost, which has been posted as a as per the estimated cost. Okay. The second use case is just the extension of that. In the first use case, we have not sold the product yet. We have just invoiced it and after that we received. But let's say the timing of the freight bill receive is even after we sold the product. So it is not only going to adjust my the landed cost of the product, but it is also going to adjust the cost of goods sold because if I have sold the product, my cost of goods sold would have been posted at 1230 only, right? So my cost of goods sold also should be updated or adjusted. And the third use case, if I talk about, is basically when everything is fine, I have invoiced my purchase order, and before that, I have received my freight bill as well. So in that case, my final cost will be posted $1,300 only, not based on the estimated one, right? So these are the possible use cases. I'm sure like there can be some more use cases based on that problem statement, but these are the three different use cases which I can think of as of now. Okay, so in today's session, what I'm going to do is that I'm going to show you the use case one because we don't have the time for going for doing everything for all the use cases, but everything will be managed in the same way. I'll explain you how. Okay, and I'm going to talk about the problem statement two also once we complete this one. Okay, so I'm going to take a pause here. Okay, and if someone has quick one or two questions, if someone wants to ask, and I'll be happy to answer that, and then we will move forward that how it can be achieved.
We are only appreciating your level of preparation, Saurabh. It's going really great.
Okay, that's good. Okay, so now let's talk about the key configurations. Okay, so what are the key configurations required? So I mean, please keep in mind that I'm not talking about the warehousing part here, so I'm just talking about the costing in the valuation. So in my examples, I will be talking about, let's say we are going to take the weighted average as a valuation method. So now how do we achieve all these things, the use cases, right? So I need to set up my cost type code. Now all your I mean, I think if you are from the supply chain background or the finance background, you will know that there is a already concept of the charge code we have, right? So the cost type code is similar to the charge code in the landed cost. Okay, it has a similar kind of setup as well. So that is what we need to set up first. So cost type code will be your freight, insurance, local transport. So all those four costs which we have mentioned, we need to configure them. Okay, you can also create the vendor cost type group and the item cost type group. So similar to the charge code groups, if you remember the item charge group and the vendor charge group, similarly you have the vendor cost type group and item cost type group you can create here, and you can set up your cost type allocation to the vendor group or the item group based on these groups, and you can map on the customer master or in the setup, right? You can define that. Now, once we have the above two configuration, you can define the auto cost type. So auto cost type is basically based on this example. I say that I have these four costs. Whenever I'm purchasing that product of $1,000, these four costs should be applied automatically, and the calculations which I have specified of $230 should be added to my transaction as a estimated cost. So how that is going to be derived automatically by the system is using the auto cost type configuration. And then you have the key parameters in the landed cost. And then we need to define that the shipping carrier. Shipping carrier is basically your a supplier account who is going to submit the freight bill to us later on, right? So the actual freight bill, let's say $230 is one the estimated cost, but when you receive the actual bills for that, uh, that supplier also we need to mark that as a shipping carrier. Okay, so that is what we are going to discuss, and I'm going to show you. So now let me quickly stop my screen sharing and then share the Dynamics screen just to show these configurations and perform that use case. Okay, let me try to share my screen again.
Yeah.
Let me know once you can see.
Yeah, we can see your
Yes,
screen.
we can see that.
Yeah. Okay. So now, since most of us will be on the recent versions in Microsoft Dynamics 365, we will be on, let's say 10.0 or 31.2 or 33, right? So I'm assuming that most of us will have the landed cost module enabled. But if you don't have that, you can go to the feature management workspace and you can enable the landed cost module. Okay, that's the first thing you need to do if you are not. So now, once you will enable that on the module list, you will find this landed cost module available for you. Okay. So now here you have a lot of things and a lot of things are related to the supply chain side, right? So, but we will be taking up the configuration which are required from the financials and the valuation perspective. Okay. So first thing which I have spoken about is the cost type code, right? So let's see like what are the cost type codes and what are the fields we can set up here. Okay. So these are the different cost type codes which we have in the demo data, and similarly you can set up for your examples. And if you see the screen, it is kind of similar screen like how you have for the charge code in your accounts payable or the receivable, which you have been using right now, I mean, till now. Okay. So one of the part in the left hand side is again similar to that, like the cost which you are having, additional cost, how you are going to manage that, or how you are going to apply that in your system. So normally we are talking about the landed cost. So that means we want to add that cost on our product cost. And so that is why your debit is going to be on the item side, right? The credit is going to be your or supplier side, right? Why supplier side? Now in the charge code we select normally third party suppliers, so it goes to the ledger account because we do not have that facility. But here we are going to select the vendor, okay? And how that vendor is going to be picked up, that we will see in the example which I will be talking through, right? Now, there will be one clearing account which you have to define here. And the clearing account is that whatever is your estimated cost is there. So let's say when you have $1,000 as a base cost in the purchase order and 230 is the estimated. And when you will post that purchase order invoice, so your liability is going to be $1,000 to that supplier, the PO supplier, but 230 is going to be the liability to the third party supplier. So how that is going to be posted, in which account that is going to be posted, and that account is your clearing account. Here it is going to be posted your estimated $230, and uh, once you will receive your actual freight bills, this is going to be reversed and it is going to be adjusted, right? Now, if you have any specific scenario, or I mean the other value, so this configuration is enough if you are using the FIFO, LIFO or the weighted average. But let's say if you are using the standard cost, so you know that in the standard cost, your variance has to be posted, right? So that variance, how it has to be managed. So for the standard cost is specific, you need to set up this account. And if you are using the moving average, right? So you need to use this moving average account here. Okay, so based on your requirement basically, or the behavior of your postings, like how you want, right? You can define your cost type codes here. Okay, so hope that's clear. Now the next thing is about your vendor cost type group and item cost type group. So this is just like grouping of different multiple items into one cost type, or multiple vendors into to have the similar cost type, right? You can create your different types of groups, and that can be useful for you when you define your auto cost. So based on the group or based on the product, at what level your auto cost should be defined, right? That is where you can use these item or the vendor cost type groups. Okay, let's see the most important configuration which we have is the auto cost here. Okay, so now in the auto cost, like just take the example of what I have taken in my scenario, right? So I'm going to define the auto cost for the area voice, right? The cost area is voice because I'm going to create the voice, because when the my product is traveling from the source to the destination warehouse, right? It is going to travel across a vessel, right? So that is what we are going to create as a voice. Okay, and that voice is, let's say I'm saying that it is applicable to all the account code, which means the all the suppliers, right? If I want to have for the item group, any specific group of vendors, a different set of auto cost, I can set up that, or a specific supplier. If I want to specify, I can select a specific supplier here. Okay, and supplier means we are talking about the shipping company, not the actual supplier who is sending us the product, right? So that is going to be there. And then we have here the all the different cost which should be applied based on our example which we are taking. So let's say the freight cost type code, which is coming from my configuration, and how I want to apply that. I want to apply based on the quantity, and it is fixed cost, and it is $100, right? Then insurance is based on my percentage, and what percentage it is, the 10%. Okay, and 10% of what, the the purchase cost. Okay, fuel, I want to take it based on the measurement and per rate, like whatever the measurement I will define. So I'm going to enter manually the 20 kg in my transaction. So $1 into 20 will become the $20 for me in in my example. But here I'm just defining that what is the per measurement rate is there. Okay, then the local transport, it is also another functionality. You can link the cost or the calculate the cost based on the existing cost type code. So local transport, I want to calculate 10%, but if I just enter 10%, it will take the product cost, right? But I want to define this 10% based on the freight cost, which I have defined here. So I can link that cost type which based on which I want to calculate this percentage. If I don't want to calculate based on the existing cost type code, I can leave it blank and it is going to take the product cost which we have in the transaction. Okay, so this is how you can define your auto cost, and you can add as many as the cost type codes you require. You can select as many type of the apportionment method, and then how the cost should be calculated, the what cost it is going to have. Okay, so this is how you define the cost type code. Okay, auto cost. And moving further now, since all these things depends on the shipping carrier, so we need to go to our let's say the supplier master. So you can go to accounts payable, and I can open up the all vendors here, and I already have this partial carrier defined as my shipping carrier here. So here what you need to do, you need to make sure that this particular supplier under the miscellaneous detail, right, it has been marked as the shipping company. Okay, so this you need to make sure, and against from this supplier only we are going to receive the actual freight bills. Okay. Apart from this, there are the parameters in the landed cost which you can set up. Okay, so I'm not going into the details of those things. So there are different parameters which are available, that how the adjustment should be posted based on the transaction date, the $70 adjustment, remember in our case, which is required. So these type of parameters you can configure here, and there are a lot of parameters from the supply chain perspective as well. So you can specify those parameters. Okay. So hope the configuration is clear. Now let's do one thing. Let's create the transaction, okay, and see that how it is going to impact our estimated versus the actual costs. Okay. So what I'm going to do is that I'm going to create a purchase order, okay, for the product which I have taken in my example. So I'll create a new purchase order here. I'll select the supplier. So let's say this is my supplier. I'm selecting the site warehouse. And I'm going to select the product which I have created. Hopefully it will work, because I wanted to have a new product in the system so that we can see the transaction easily. So I'm going to put the price as 1000 just for the simplification, right? What we have taken. So I'll save this. Okay. And I'm going to confirm my purchase order. Meanwhile, let me open the another tab as well, so that now one of the thing, it has been confirmed. Now one of the thing, if you see that in the line details, you have got the landed cost as an additional tab available. And right now we don't have any voice created against this. No information is available from the landed cost. So that is why this is blank. So now what I'm going to do is I'm going to navigate to the landed cost module, and I'm going to create the voice against this. Okay, so I go to landed cost. So I have the voice here. So I go to all voice, and I'm going to create a new void here. And what I'm going to do is that in the description, I'm going to copy the same purchase order. So this is what has been created. So I just put this. So voice is a vessel, right? A single vessel. So I mean, we will just select this, which vessel it is traveling through. If you want to map the journey templates and all those things for managing your whole supply chain activity, you can manage that. But for us, the important thing is the managing this shipping carrier. So we are mapping this one and click OK. Now what it is going to show us that all the purchase orders which we have in the system, right, and which are confirmed right now. So I'm going to select this purchase order, and I have the lines here. So these are the steps which we need to do. So we need to add this to the staging list, right? Once this is added, we are going to go and view the staging list. And once that is done, we are going to add this to the shipping container. Okay, so I'm going to add the shipping container. And which shipping container? Let's say I'm taking this container and then I'm clicking OK. So once this is done, my voice is created and I can open this voice which I have here. OK, now I can edit this voice, and one of the thing which I have to add here is that the measurement. Remember, we have the fuel to be calculated based on my measurements which I have specified. So I'm going to enter this manually. Okay, there must be some automatic way as well for defining these fields from the supply chain perspective. So maybe I'm not aware about this right now, but I hope there is some automatic way as well available. So once I save this, this is my voice which has been created. Okay, and if I go and refresh my purchase order, I can see that my voice number is reflecting in my purchase order as well. Now, all my costs, which I have defined as an auto cost, right? So my purchase order is associated with the voice, right? Now my voice should have all the estimated cost, right? So how do I see? So on the top, I have multiple options as available. So one of the thing which I can see that I can click on the cost inquiry in the general tab, right? And see that what are the different costs which I have in my system as a estimated cost. So if once I click on this, if you see, it has the freight $100 which we have defined. The fuel it has calculated $20 based on the measurement. So if I change the measurement from 20 kg to some other value, it is going to change. Insurance it has calculated, and local transport based on the freight 10% of the cost. And all these things, if you observe, it is under the estimated. The actual cost column is blank as of now. Okay, now here you have got the view of viewing this in screen by different ways. So if you want to change the view, you can change it like how you have in the inventory. You can view by site, warehouse, location, and other things. Similarly, you can view this screen as well. Okay, so this is one thing which you can see here. Apart from this, you also have option of uh, posting the product receipt and the invoice directly from here for the purchase order which has been associated with this, or you can go to the actual purchase order and then and then do those activities. Okay. Apart from that, you also have the option of voyage cost here, which is going to populate all the voyage costs which are auto cost defined for you. But let's say if you want to add a additional cost type code here. So how do you do that? So if you want that, you can add it manually here. But by default, whatever you have defined as auto cost is going to be populated here. Okay. So this is done. Now what I'm going to do is that I'm going to talk about the first use case, right, where our freight bill is received after the invoice, and the freight bill, the estimated cost which we have 230 is the freight bill is having the different cost, right? So what I'm going to do is that I'm going to post the product receipt, so I can use the product receipt option from here itself. So it's a normal product receipt, what we do for our purchase order. So I just post this. I can go to the purchase order and post the product receipt. That is also I can do. Okay. And if I go to my purchase order, let's say if I refresh, it has been received, right? And let me do the invoice from here. I can do invoice from there as well, but let me do it from here. Okay, so I'm going to enter some invoice number, test, right? Invoice date, all these details. I'm going to update the match status. It is passed and everything looks fine, let's say for me, and I just hit the post here. Now what it is going to do for me is that it is going to update my the cost for the product because it has been invoiced. So you know in Microsoft Dynamics you have two types of inventory, the physical and the financial inventory. Since we have posted the invoice, my final value financial inventory is going to be updated. Now how do I check that? What I can do is that I can refresh this and I can see that at this level, this has been invoiced, and let me check my inventory transaction at this stage. Okay, so what is my inventory transaction saying? That this is the product which has been purchased, the quantity is 1 and the value is 1230 for me. Okay, now here comes the twist that now I received my freight bill after this. Okay, now if I receive my freight bill after this, and that freight bill supplier is submitting the cost not 230, it is going to submit me 300 for all the four different costs. Let's say the all four different costs which we have applied are going to be given by the same supplier. Okay, so for recording the freight bill, you can use the invoice journal in accounts payable. So I'll go to the invoice journal here and create new AP invoice lines. And normally like how you select your information. So here I'm going to select that shipping carrier. So I've selected this. I'll put the invoice date and invoice number, right? And I'm going to put the credit here because I know the bill is for $300. Okay. So now this has been posted. Now I need to allocate this $300 as an actual cost for my all the posted cost, the different cost type code. So how do I go and then link this back, right? So what you need to do is that you need to go to the function here and you need to select this voice cost here. And here you need to select to which voice you are going to allocate this cost. So I'm going to allocate to this voice and click OK. And this is going to fetch me all my cost, which I'm going to for which I'm going to allocate. I think there is additional setup for the item, which I will ignore as of now. There is no estimation for this. But let's say I am going to allocate the actual cost. So let's say the same this supplier has submitted the bill for all the four different costs. And if you see all are coming from the voice here. So let's say this is correct. This is 100 only. Insurance is let's say 120, right? $20 more, right? And let's say this is fuel is my $70, right? And this is my $10, right? So I think it comes to your the complete 300. And once you see that it has been marked and it has been allocated, and on the top also you can see that what is the remaining. So what you entered in the line level in the journal as a credit 300 should be allocated to all the different cost components you have. If not, it is going to show you the what is the remaining value so that you can manage and allocate the value to the respective codes, right? Once this is done, that I can click on OK here. And what it is going to do is that it is going to populate all the mapped accounts, right? So remember the account which we have mapped on the cost type code, those are going to be populated and the debit amount is going to be populated and it is going to have my description available as well. Okay, the offset is not going to be there. Okay, now if you observe one more thing on these debit lines on the bottom, you have the cost type, freight, and the reference available here. Okay, so all these values are available. See local transport. So what value? So this is for local transport. This is for fuel, and this is for insurance. Let's say, right? So this is available. Now, one of the question many of you might have is that do I need to do this manually, going for each invoice and do this? And so no, I'll send you the link of my one of the blog which I have written. This is also available in our data entity of the invoice journal. You can add these fields and you can use the Excel add-in to import these invoices and link back to your voice as well. Okay, so that it is easy for you to manage these things. Okay, now I'm going to post this. Okay, and while I'm posting this, once this is posted, my inventory cost, inventory transaction is 1230. Now I'm going to refresh this and see that it is going to change to 300 now, right? Now, if I see this, that how it is going to be updated, if I go to the transaction detail of my inventory transaction, it is going to show me the adjusted amount here, right? So which is 300, right? Now, if let's say, and the physical cost amount was, let's say 1230 for me here, it is available. Now, let's say if I want to see that what are the voucher entries, because we are talking about the financial impact as well, right? So what are the voucher entries which are which are going to be posted, right? So let's analyze that and let's see how it is posting this. So what I can do is that I can go to the voucher transaction and I can generate the voucher transaction on today's date, right? So that I can see the transaction which have been posted for this. I have not posted any other transaction, so I can see this. Okay. So now, if you see this, right, and we will talk about the posting type only basically, okay, because we know that ledger accounts you can map whatever you require. But one of the thing which you observe here, this is my invoice transaction. Okay, till here, I think this is my invoice transaction. Okay, the product receipt plus the invoice transaction. And one of the thing you observe here is that the component of 230 has been posted in the landed cost, the clearing account, right? And my vendor liability is only 1,000, the actual PO vendor liability. That means that 230 was sitting in the clearing account. Once I posted the freight bill, right, which just now I have posted, if you see it has been posted 300 here and the vendor balance is 300, and it has posted a adjustment of crediting the landed cost clearing account 230 plus 70, right, just to offset this 300, and it has increased my debit to my inventory account as well, the cost of material invoice. So the cost of material invoice, if you see when I posted the purchase order, it was just 1230 based on the estimated cost. So it required the $70 as a adjustment once I post the freight bill, and this is the line which is making this adjustment to my actual inventory which has been posted. And by doing this, my actual physical landed the product landed cost has been posted as 1300, and system has done all these corrections. Now, taking about this use case, if you remember, the use case one is this. The use case two is, let's say, if this bill, the freight bill, was received after my product sales, then if I'm using weighted average and this thing, right? So what I should have done after recording this bill, the freight bill, the cost of goods, to correct my cost of goods sold, I should go and run my inventory recalculation, right? And so that my system goes and picks up that sales order and picks up this final value of my product, and then makes the adjustment of the $70 to my cost of goods sold. Okay, so hope this clarifies your the overall end-to-end use case along with the problem statement, how I define my estimated cost in my purchase order, how link back to the voice, and then how it gets impacted when I record my actual freight bill using the invoice journal, and how do I link these voice to my invoice journal, right? So that is clear for you. Okay. So I'm going to take a pause here, and I think we are already 6:20 almost right now. I have one more use problem statement to cover, but I'm not sure how many of you are going to stay back. So what I'll do is that maybe let's take the questions based on this first part, what I have explained. Okay, and let's close it properly. And if you guys think you can stay 15 minutes more, so I can explain about the next use problem statement as well. Okay, so open for your questions. Anyone has any questions, please feel free to ask.
So can I ask one question
Yep.
on your last statement or last scenario what you explained? If this invoice for the freight comes in after the goods have been sold, right? Again, that's a very common question from everyone, and that's very practical as well. What happens that if that invoice comes in 2, 3, 4, 5 months late? Right, that's possible. Generally, invoice will be in the same month or next month. You already close the books, the monthly books here, and all the inventory calculation, everything.
Yeah, absolutely right. So I think it is going to behave in a similar way like how other recalculations will work. So let's say after 4 months, I think if you are doing, and if you are running the recalculation on that date, the adjustment date will be that, and your cost of goods sold P&L will get impacted in that particular month. In my opinion, I think that is how it is going to impact. So of course, yes. So your 4 months back sales might have a P&L impact 4 months after, once you are receiving this freight bill, possibly.
Right. So ideally, it will create cost of goods sold in the current month whenever you are incurring that.
Running the recalculation, basically. Yes.
Calculation line. Yeah.
Yes. Yeah.
Sure. So we have some more question in the chat. You're gonna start chronologically. Should we start from? What is the first question? Okay, I attempted one question, but I think you should start with that. Can you read this question from Abdul?
Just a minute.
Almost half an hour back.
Okay.
After an actual
Abdul,
trade invoice is posted.
if a purchase 500 cartons and I find that 10 were damaged and I need to return them back, if I return them before posting the freight invoice, the estimated cost will be reversed, but will the same happen if the freight invoice is already posted? Yeah, interesting. So what you're saying is that if you have posted everything, I'm assuming first thing that your freight is also posted, right? And now you realize that you are doing the quality check or something. So partially your goods are damaged and you are returning that. Yes, in my opinion, the cost will get impacted, right? But I think we need to also check that when you are creating the return order, right? So what are the auto costs we are applying? Definitely the estimated cost will be reversed. But then you also, in my opinion, look for the credit note from your shipping carrier, right? The shipping supplier as well, right? And once you receive that uh, credit note from the shipping carrier and you link that return voice, right, what you have, right, with that, right, and then it is going to reverse your actual cost. But in my opinion, at the time of return, it is going to return only the portion which has been the estimated cost basically, or you can adjust, in my opinion, not rely on the auto cost. If you want to reverse the actual cost portion as well, you can edit the cost value in your voyage cost itself, the voyage cost form basically. So yeah, I mean, I tried answering this, not sure like if it is answering or not, but I think it is about doing performing this scenario basically. But I think that is the way I would go for reversing that transaction. Okay.
Feel free to
Next.
Sir.
unmute Abdul. Yeah. Sure. Uh, yeah. Sorry. Go ahead, Satya. Yeah.
No, yeah, I think we can take the next question. I think this is a very reasonable answer, very close to what Abdul was asking for. I think he.
Okay, so next one is adding
Yeah.
to this. Varun is asking, adding to this, what will happen to the cost amount which was contributed locally, something not related to vendor in this case of return? Will it be just expense out? I think again it is depending on uh, your treatment of that cost. So I'm assuming that if you are having, let's say, local cost, and if you are using, let's say, the existing charge code functionality for that, right? And whatever is your configuration in your charge code is there, like whether it is debit is going to the expense side or is it going to the product side, right? I think based on that it will happen. And when you do the return order, you have the option that you want to apply the existing charge codes, right? So it has a functionality like if you have the charge code in the original purchase order, and when you create the return order, like whether that charge code also will be applied as a reversal or not. And but again, your if your charge code was applied to the cost of the product or expense out, then again it goes to your credit note on the third party supplier basically, in my opinion. Okay. Vikas is asking, supplier used on voice is providing services, since the destination company is paying the liability and adding these to the additional cost of item cost. Okay, doing a purchase return will return goods to the actual supplier, so main supplier will be debiting with the amount excluding cost. Okay, he's trying to answer that, right? Like
Yeah.
the freight supplier. Yes, that is right, but not sure about the business scenario whether your the third party supplier is still, let's say, custom duties and other things you have, like if those are also involved in the return one, because the port charges and everything is still will be applicable because it's just a movement of the goods for them,
Exactly. Exactly.
right? Does it cater, Rachit is asking, does it cater scenario from where multiple POs are invoiced together and the cost is split across the multiple orders? I'm not sure about the multiple POs, Rachit, but I know like if you have multiple items in the same purchase order, right? So it splits your estimated cost across you allocate to multiple line items as well. So I think in it if you consolidate multiple POs, possibly it is going to do that as well.
In
Yeah.
one voice, you can add the lines from multiple POs.
Multiple
Definitely, you can
POs,
add.
yes.
You
So
can,
I
yeah.
think, yeah. So if it is going multiple lines for one PO, I think multiple POs lines also it might
Yeah,
work in a similar way, possibly.
brilliant.
Right. Thank you.
Lakshman is asking, landed cost module is mainly used to show the goods in GIT. That is the use case I'm going to talk about if you guys still ready to be here. So purchase order should be invoiced first before receiving the goods. Yes, that's the next problem statement which we have. Okay. So, yep. Inbound tracking from shows journey of the goods from the source to the destination.
Yeah, this was a question I asked. Arvind replied. So my question was, as a purchaser, how do I know what is the journey of my goods going to be like? Like what my supplier will use? I generally don't have visibility, but yeah,
Yeah.
if you
Okay.
want to
That's
add
good.
on to that, yeah.
I think that's good. That's good. And I'm loving it. Like people are answering that, so people have uh information about all these things already. Yeah. I think Sahil has like when receiving third-party bills from different vendors such as freight, warehouse, demurrage, and CFO, how can we book these bills against one purchase order? Will the system allow to book multiple bills for uh, one PO? Yes, you can. So I think if you see like right now, I selected a same shipping carrier and allocated the cost against all the four costs. But let's say in my example, insurance was from different supplier, freight was from different supplier, and local transport was from different supplier. So I could have you linked, I mean, recorded the different multiple bills, the freight bill, the invoice journal bills against the different cost and allocate respective amount and link with the same voice. I think I could have done that. Yes. Ethan is landed cost has limitation of invoicing PO in the same month to calculate the item cost. Is there a workaround to this? Landed cost has limitation of invoicing PO in the same month to calculate the item cost. Oh, you mean to say like if we don't do the invoicing in the same month, it is not going to calculate? I need to check. Sorry about that. Not sure right now. I don't want to make a comment on that, but I need to check on this. Could you please share the document recording of video? Yes, it will be. If some of the items are wasted while shifting it from port to the warehouse, how to track this? Again, I think it depends on your agreement who is going to take that liability. So if supplier is going to, let's say supplier has submitted bill for 10 quantity and you find that one quantity is damaged during the transport. So are you going to charge this back to your freight supplier or the actual supplier, or you are going to take that burden? I think it generally depends on your contract. So if it is from the freight supplier, in my opinion, you will record their bill and you will also ask for a credit note for the part, I mean, for the penalties or things which are there, right? And I think if you have the insurance, I think it will work in a different way because you have the insurance for that. Then your insurance vendor is going to pay you for the damaged goods, in my opinion, if you have the insurance cost applied already. Yes. So Arvind has responded for one of the question for Rachit again. I think you should have one more session from the supply chain perspective, and I think Arvind is the right candidate. We got that. Okay. What will happen when we actually receive the material? I think it is going to have the same thing. It is going to be posted as estimated cost only when the material is received. I was in another call. Lakshay, why I missed someone? Okay. Is there any link with the container creation using advanced warehouse management? Sorry about that, Arun. I'm not sure about that. I'm not the supply chain expert. So maybe Arvind will be able to help you out in that, possibly. Yes. Okay. Okay, so I think we completed the first part, and sorry about that. Like I could not manage to complete the second problem statement. So not sure if you want to stay back for 10-15 minutes, and if I can maybe just walk through the PowerPoint and not going into the system, if everyone is okay about that.
Yep, sure, we can.
Yeah, I think
Sort
the stage is all set. Go for it.
Okay,
Yeah.
cool. Okay, so let me quickly share my PowerPoint. Okay, let me know once you can see my screen.
We can.
Okay, so this was, I mean, I prepared the slide like just showing what is going to happen in the use case one, which we have already seen in Dynamics. And yeah, so I'll skip this. So the problem statement two is the same. I think someone has already put in the chat box, right? The what if the supplier submits the invoice before the goods are delivered, we receive the PO, right? So how do we manage that? So and and that is the additional functionality also as part of landed cost, that goods in transit management, right? So normally the process is that we create the PO and it is confirmed vendor is shipping the order along with the PO invoice. So the goods are still not received at the destination warehouse, right? But we need to record the invoice before receiving the goods. So how do we record that? How it is going to be managed in our system from the valuation and from the accounting perspective, right? So we need to do some additional configuration in the system. Okay, so what we need to do is that we need to set up a delivery term, and in the delivery term, uh, or the terms of delivery, I think it is specifically if I say right, we there is a checkbox which is the goods in transit management equal to yes. So I think that we need to enable first. The second configuration which we need to do is that against the main warehouse where this is going to be received finally, we need to map the GIT warehouse, the goods in transit warehouse, and one under delivery warehouse in case you receive the partial shipments, right? And the third thing, so this first two configuration will manage your inventory transactions, and the last one is the posting profile. So when you will receive the invoice, right, that time you can't account it as a actual inventory for you because it has not been received in your warehouse. So you need to park this into your goods in transit account in your financials. So that account has to be mapped in the posting profile, and it is available on your normal posting profile form where you define all your purchase order related accounting item related postings, right? Similarly, you will find one GIT in the bottom. I think second last or the last one is the GIT account. So once you do this additional configuration, uh, and just assume that what transaction we have posted just now, right? And similarly, if this is going to happen here, so how it is going to behave, okay? So the inventory transaction perspective, what will happen? The first transaction you will do, right, is that you will record the purchase order invoice. Okay. So if you are recording the purchase order invoice, I have taken the value as 240 just as an example. So let's say the total value is 240. And here I'm not talking about your estimated and actual freight cost. Okay. That covers that treatment is covered in the previous three use cases. Now here we are just talking about whatever is the final value which is going to be posted, how it is going to be treated. So now if you see that first transaction you will do is you will record the purchase order invoice against that voice, right? So whatever the purchase order is there. And when you are recording the PO invoice, you need to make sure that on the top, when you select the product receipt quantity or ordered quantity, you need to select the ordered quantity because you can't select the product receipt quantity. Okay. And once you post that, system is going to create these transactions for you. So what it is doing generally, if you see, the first line is the purchased against the reference purchase order, which means the moment you post the invoice, it is converted into your purchased. Okay, so that is there. But immediately, and in the main warehouse 11, right? Let's say that was my main warehouse. But immediately, system is going to have another transaction sold -1 from the same warehouse. So in that warehouse, my inventory is 0. Okay, my invoice is recorded, but my inventory is 0. And where this inventory is going, it is going as a purchased inventory in the 11 GIT warehouse. Okay, now there this inventory is sitting right now. Okay, and subsequently it is also created two transactions, because we know that once we will receive the goods in transit order, which will be created once we post the purchase order invoice, that is my inventory which is going to be out once I will receive the goods finally. So that is why it has created the ordered as a one of the transaction here, which is positive, and it has also reserved -1 physically in the GIT, because in the GIT whatever is sitting, it is going to be removed in the future when we actually receive the goods. So this is the first set of inventory transactions which will be generated. Now, so what system will do, once you will do the purchase order invoice, it is going to create a goods in transit order against that voice which we have created for that purchase order. And once you will post that, what will happen? Just observe the last two lines, because the first three rows are same here. The the last two lines is like the ordered one will be converted into purchase, because now you actually received that goods. Okay, and then it will be sold for you from that goods in transit warehouse. Okay, so that's your inventory transactions. But how financially it is going to impact it for us, right? So again, sorry about the values, but financially, if you see your not normal invoice, when you record any invoice in your D365, your supplier is going to credit 1,000, because I am assuming that 300 is my landed estimated cost. So that is going to be clearing account. And initially, first it will post as it is the cost of purchase material invoiced. It is going to post in that account. But subsequently, immediately, it will move the value of 1,300 from cost of purchase material invoice to the goods in transit account. So now, after invoicing, that my inventory value is sitting under the landed cost goods in transit account. Okay, that is where it is sitting. And once I will receive the second activity, once I will do the second activity of this inventory transaction, the GIT receive, right? And that is where again it is going to transfer from my landed cost goods in transit account. It is going to credit that, and it is going to debit my actual inventory account, which has been where it should be posted. So that is the financial impact which you are going to have when you have the GIT orders. Okay. So yeah, I think I'll not take more time for this and stop here, because again it is going to take a lot of time for explaining the transaction. But I think it gives you a better view about that, how your GIT goods in transit order will be created, what additional configurations you require for that, and what is the impact in your inventory transaction, and what is the financial impact of that particular thing, right? And it will be available for you. Okay.
Do we have
Any
more
questions on
questions?
this?
Saurabh,
Yes.
when do you use the goods in transit? I think there is also a question about the ownership of the inventory, right? Goods in transit is used generally practically when you transfer the ownership to the buyer, then the owner has to take the goods in transit as soon as the good is shipped from the origin port.
Warehouse. Yeah.
You have to take it from in the GIT, right?
Yes. So I think ownership the moment we record this invoice, I think the ownership shift to the destination, I mean, to us who is creating the purchase order on the customer, not on the
Mm-hmm.
supplier, in my opinion, I think. And again, then I think in the practical business scenario, as I said, right, there are a lot of like the insurance, custom duties, and all those things are there. So I think the customer makes sure that they hold them accountable, like shipping carrier and the shipping companies accountable for managing this transit options, right? Like all the goods which are in transit.
Mm-hmm. Yeah.
Yeah.
I
Okay.
think there are
Yeah.
3 more questions in chat window. If we can please cover them, that would be great.
Yes. Let me go. Which
Not sure where we left.
Okay, I
So
think Vikas one. The only
Vika, yeah,
from finance posting perspective, what is the major difference you can see if we use charges on PO versus landed cost module? I'm not counting CM part. I think one of the biggest difference is if you see right the estimation of the cost and then the actual cost recording and also the recording the bills the freight bills and the other different cost bill from the shipping carrier, right? That's not available as part of your charge code. You need to manually manage that clearing account. You need to there is no link back in with the clearing account and the actual freight bill which you receive. But in this case, you have a link back to your clearing account and also the original transactions, and your valuation is getting impacted. But in charge code, I don't think so. You will be able to manage that so easily. Uh, I think that next is from Satya. I think from the advanced warehouse process voice container is created in the original port and data entity is available for. Okay, you have answered that.
I was attempting this
Okay.
question, but maybe I'm also missing something in the advanced warehouse.
Okay. So I think that's it.
But
What we
I'll get
have.
back to you if I can find something around.
Yeah. I think we can have one more. I mean, not sure. There are a lot of people in the
So
audience. If someone
we'll
wants to
definitely
volunteer
make this like
the
such
supply
a
chain side of the landed cost, if someone wants to volunteer and give a session at it, that will be great.
yeah.
Okay. I think we don't have more questions now.
Yeah, I think I just want to say a big thanks from my side, Saurabh. It was a really great session. And
No
if anyone
worries.
wants to unmute and say something, feel free to unmute and give your feedback. We have received some feedbacks from the link which we have shared, so thank you for that. If you have not left your feedback, please leave it so that it gives us some visibility of what you are thinking about it. But yeah,
Yep.
feel free to unmute and say thanks.
Thank you, Saurabh, for
Sure, yeah.
the great
That
session.
was
Uh,
amazing session.
No
Yeah.
Thank you.
worries.
Thank you, Saurabh. Thank you,
yeah.
team. I just want to mention something. I think in this lending cost, do we have like under receive or over receive kind of scenario?
Yes, you have. Okay. So if you remember just now, I was talking about uh, for partial shipment. Let's say if your vendor has supplied the partial, right? So you have the under received good warehouse as well, like similar to goods in transit, right? That also you can map and manage accordingly. So I think yes, it your fundamental remains same in my opinion. The over delivery under delivery parameters along with some additional configurations. I think yes, it is there. If you have some scenario where you are receiving partially and system should allow, so I
Yes.
think it should go with your under delivery parameter or percentage you define possibly.
Thank you. Thank you, sir, Saurabh. Thank you, team.
Yeah, yeah. Cool.
Thanks, sir. Yeah, so I
Okay.
think everybody is asking this session will be on YouTube or not. Yes, definitely this will also be posted on YouTube like
this
our
will be
other
done
videos
probably shortly. Yes.
shortly. Considering the high demand of this particular one, we'll do it just now. Okay, so let's talk about our next session now. So next session is happening in next 2 weeks. Generally we have it every month, but again, we have more speakers coming up now to give the session. So we're having our session on 20th of July, same time, from Parag, right, who's also MVP. All right, so we are still looking for speakers. If you want to join this community, want to speak, want to give more session, maybe Saurabh, we will also invite you again. You seem to be the most in demand from finance
I
and ops.
I will love to be part of that. I can do every week if you want. But people will be bored of me then listening me again and again.
I don't
Okay.
think
Not
so,
at all.
listeners will get bored of you. We love you.
Right, and you can submit your idea if you want to hear about from Saurabh more, maybe, or you don't want to hear from Saurabh again, maybe give your idea. Right, so submit your idea, more sessions from any speaker of more topics, different topics. So they scan this barcode and submit your ideas. Right, so Thank you very much, guys.
Thank you.
We won't take you much time now. We are over time a little bit. So yeah, feel
Yeah,
free
and
to email and post your messages in the chat and our LinkedIn group and our YouTube channels. Thank you very much.
thank you everyone. And I think you
Thanks,
guys
Saurav.
also have to go and sleep because it's too late for you guys now. I think it is 11 or more than, 11 p.m. or more than that.
It is 11:15. Yeah.
Yeah.
10:15.
Okay.
Yep.
Thank you
Okay.
everyone.
Thank you.
Okay.
Thanks,
See you.
everyone.
See you
Thank
the
you.
next time.
Bye.
Bye. Bye.
Thank you, everyone, and thanks everyone
Thank
for
you.
joining.
Thank you.
Whoever is joining the video.
Thank you. Thank you.
Thanks.
Thank you.